Afternoon, everyone. Welcome aboard to our weekly recap. My name is Carlos Garcia. I haven't been on camera much, but glad to see everybody. Hope everyone's doing well. My thing when it comes to the camera work is that A, mess with, and B, you're not here to see my face. You're here to see the charts and to make money and to learn, right? That's really why we're here. So again, the idea is to show face. Hello, yes, I'm alive. Glad to see everybody. I didn't do a YouTube this past week because my roof was being worked on. I also did some landscaping stuff this weekend I had to knock out. HOAs suck, guys. Let me just make that clear. I hate homeowners associations, but work's got to get done. I do have a special guest today. I have Nick B. That's what I call him. B. Hello. Or Blags. I call him Blags, but you can call him Nick B.
Like Wags.
If you are in the server, again, this video is for everyone on YouTube, but if you are on the server and part of the future service, this is the head of our futures trading. My goodness, it's an honor, Nick, to have you.
No, it's an honor to be
Thank you for walking across the hall into the options division. Thank you so much.
Oh, it's wonderful. It's always a nice trip.
Right between the vending machines and the bathroom.
I love it.
Right. Well, glad to see everybody. Glad to talk to everybody. We have a lot to go over, obviously. So I guess what we're going to start with is kind of how the week went, right? Not something I'm proud of. But, work has to get done. We just finished July. July is in the books. 11 out of 13. I know right now it feels like crap, options team. I'm there with you. It's tough out there, especially when, I was long small caps and then we completely reversed. I had long Bitcoin. We tagged 70K and we fell back down. So much to go over. But at least for July, 11 out of 13. Hey, we hang our hat on that we only had 2 L's and we were pretty consistent. That was the best month that we had since May when we were 10 out of 11. June was tough, 7 out of 16, 48%. April, 15 out of 18. So again, 3 out of the last 4 months, over 85% when lost. That's pretty solid. We still have a strong track record. Still have the record, Nick. 13 out of 13 in March. Remember when we got that?
Yes.
So again, I know right now it doesn't feel good. And trust me, I'm pissed off too. That's where I wanted to go on camera to show you guys that, hey, I care about this stuff, man. I'm riding with you guys, and it doesn't feel good. And now we get to the weekly. Russell, I held too long personally because my name is Carlos and I'm an idiot. It happens. It happens. I held on to Tesla for too long. 80% profit in my hand, reversed. But that was a masterclass trade. A lot of the masterclass guys got it, so congratulations to them. But I want everyone to know that this is not easy. This is not easy. I don't think anyone could see the screen I was showing currently. I think everyone was showing the...
they see the TOS screen.
Right. Let me go ahead and bring it up. Hold on a second. Here we go. Let's go to GAR signals. All right. Now we can see the spreadsheet. Hello. I'm still working on things. Okay. July. Let me go and retract everything. 11 out of 13 this month, this past month of July, even though it kind of feels like crap because we had a really rough one this week. But in context, we're doing pretty solid. 11 out of 13, 85% for the month of July. June was tough, 48%. I'm not going to sit here and say it was easy because it was the hardest month of this year. May, 10 out of 11, 91%. March, 13 out of 13. Perfect month. That's never happened in the history of GAR Capital. So March 2024 was one for the books. February, 69%. And January, we were 78%. So in the grand scheme of things, we're doing rather solid. Again, July was solid. The last 3 out of 4 months, we were above 85% when lost. That's very, very solid. Hope to get better, but we just got hit. Again, the Russell, dumb. I held it for too long, but most of the people that traded it got either 30 or 40%. It hit in the money 3 times. Palantir didn't work out on that flip. Upstart didn't work on that flip. Both are small caps. So let's go ahead and flip this back to, oops.
No, it's all good.
Yeah, obviously I'm still working on things. Okay, here we go. So that was the week, a tough one. But again, the reason to show that was to show that at least in the grand scheme, at least for the year, we're looking pretty good. And this past week was not good. So we just got to be better for it, right, Nick? That's kind of what we're here for. So let's go ahead. One big house cleaning thing or housekeeping note. I will be out this week. I'm going to go ahead and take just relaxing time off, kind of get my eyes off the charts for a little bit, and then back on it as things kind of build up a little more as we get closer to election, seasonality, the Fed possible rate cuts in September. I think next week would be a good time since we don't really have much in terms of the economic calendar. What do we have this week, Nick?
We just have bond auctions, and I believe it was
bond auctions,
ISM.
Yeah, we'll talk about bonds here in a second. So again, ISM manufacturing, or is it services? Some PMIs, I guess.
ISM services PMI. Yep.
Right.
And
right.
unemployment claims Thursday.
Yeah, and I think. Yeah, I see that. Okay. Yeah, I went ahead and posted that on the Discord as well, courtesy of the Discord bot that we have. Of course, the live market blog is free for everybody. All right, so with that being said, not tons on the calendar. I won't be in, but Nick is on, who is speaking right now. Nick, you want to say hi to everybody? Make sure everyone knows who you are?
Yes, sir. Hello, I'm Nick B. I just take care of the futures department and pop my head in every now and then into options.
Yes. So Nick will be updating. Nick will be speaking. Nick will be taking care of things since I will be out this next week. So again, I appreciate to him, but we're going to go ahead and get started and kind of do it together. Me and Nick, step by step on what we're looking for and basically what do we do with this price action, right? So Nick, I'd like to ask you, is it over? Do you think that's it? We're done? You think more downside? What do you think?
I really do, but my not problem, but what I'm keeping in mind, because I can't be ignorant. Let's kind of go over what happened into this last month. First and foremost, I will point out that I was absolutely on the wrong side of the market in terms of looking for, higher lows that we could bounce off of. And even when we exceeded a 10-11% pullback on the Nasdaq, I figured, this is as bad as it gets. And what's kind of throwing me off is we're below most of our primary trend lines. And it puts the market, in my opinion, in a little bit of a complacent spot where we know that seasonality is kind of weak here. And what I would ideally like to do more than anything here is be a little patient, because it's either going to bounce out of here and then we continue chopping into, I think, September, October, when things pick up, or we're going to get just a little more bleeding, just a little bit more downside, just because we kind of are below those primary trends. On the big picture, I do want to say this is the bottom. I really, really do. But again, I just can't in the moment ignore the fact that we're breaking down. We broke down. But again, seasonally also there's a bit of weakness. It only makes sense that we also slow down in the current areas that we're at. Maybe we find a nice little 500, 700 point chop range. NQ is very famous for doing. And other than that, I mean, we'll be playing it really prudent. Definitely got to sharpen up, because also going back to July, I mean, July was just, I had to really scrape for every point that I gave back. I had to scrape it all back, and I do want to turn my attention to, moving forward, I guess the intraday quick hits, quick ups and downs in terms of direction. I can't tell you that because my confirmations for directions are a little bit of ways away. And real quick, since we're on the Nasdaq, my confirmation for upside that I've been eyeing since last week is, this is going to sound far-fetched, but 20,000 breaks, 20,100, it's over. We're going to the highs. There's no way around it. And then if we remain below, specifically, I want to say below 19,000 into this week, as long as we're below 19,000, that's going to expose us down to possibly even seeing first 18,250. Below 18,250, I really am drawn to 17,900 to 18,000. That's roughly my 200-day EMA on the daily.
All right. Well, quickly, let me ask you this. Can you name me the last time that we had 5 red weekly candles in a row on the Nasdaq?
I want to say it was back in March. Let me just double check. Nope.
December of 2023.
Ah.
That's the last time. Again, I want to make this call. I want to make sure I look into everyone else's eyes in the camera. I want to make sure I say this very, very clearly. Unless, caveat, we have a world war. Out of my hands. The economy is fine. But Carlos Jobs, that's what we wanted if we wanted a rate cut. You have 2 different schools of mind. Do you want rate cuts so your economy can do better. I assume you're a real estate person dealing with someone with assets. You want rate cuts regardless of what it does with the economy. Who cares? You want to borrow money cheaper. You want to expand your operations, whatever example. Or do you think that we have a great economy? It's one of two things. You don't cut rates in a good economy, Nick. A lot of people kind of get that backwards. But it's different because we're not talking like we're having a meltdown or a slowdown. You have to think of it in the proxy or the kind of example of the 1980s, the last time we had a spike in inflation. Very similar. Everyone says highest inflation in 40 years. Correct. In one of the better economies throughout history, which is the Reagan economy in the 80s. Everyone called the boom in 80s or whatever you want to call it.
Reaganomics.
Right. And then we had, different booms have different names. Fair enough. But at that time, in 1982, we were just getting out of a recession themselves. Same as 2022 for ours. Technically speaking, we were in a recession in 2022. Some people may differ. Doesn't matter. Technically speaking, we did. Two consecutive quarters of negative growth, GDP. That was 2022, and that was in 1982. So we also cut rates in 1982, post-recession. And what did that do? That actually created a springboard into 84, 85, 86, and then obviously 87, we had the crash, which actually a lot of people don't talk about, actually bounced the year right after. I mean, think about how quickly we bounced off COVID, basically a worldwide pandemic. And what we're getting into now is a monetary policy that's based on undoing too much tightening rather than loosening monetary policy because things are bad. I don't think anyone can walk down the street or go to an airport or go to a mall and say the economy's bad.
No.
People are out living. They're doing stuff. If people are employed, Nick, people are going to spend. It's just the way the world works here. So we just had a spike in unemployment claims. Remember that on Thursday?
Yep.
And then we also had the non-farm payroll report. And I went ahead and wrote on there and I said, what's important about this report? I said, we want a low jobs number so we can have the kind of the runway to a rate cut. We got the low jobs number, and the only thing that we had a runway was the crash or the fall of growth stocks.
Right.
But you would think, wait a minute, isn't that what we wanted? Carlos, I want my stocks to go higher. Let me make this perfectly clear again. Stocks do not peak in July. They just don't. They peak in December and November. Those are the 2 months where we usually peak, but not July. So back to the scenario here. December of 2023, 5 consecutive weeks in a row of Nasdaq being red. Since then, none. Do you want to know how much the stock market in the Nasdaq has gone up since those 5 weeks of red? Oh, it went from 11,088 to 20,983. Now, I don't live in a dream world, and neither do you. Like I have said many times on YouTube, trees don't grow to the sky, guys. They just don't. They go up, they come down, they go up, they come down. And all we do here as traders is take advantage. It is still a bull market. Let's make that clear.
Yes.
We have finally retested the all-time high. Remember the one we talked about at 18,960?
Yep.
And at the time when we were at 20,000, we weren't thinking that of retesting that quickly. So do not confuse pace with direction. Oh, that is so important, Nick. I want you to write that down. Do not confuse pace with direction. Just because something happens fast doesn't mean that's going to stay that way. I bet you a lot of people told you to sell stocks during COVID in 2020. How are they looking now? Not smart. Again, just because things happen quickly, hell, if you fall down a flight of stairs, you could either say, hey, I busted my butt and I messed up, or man, I got down those stairs rather quickly. So with the point being there, it's an old saying, it sounds a lot worse. But in terms of okay, hold on a second. Yes, do not confuse pace with direction. Sorry. Nick just sent me that. Nice. In that regards, regarding pace and direction, I'm sorry I got thrown off there, Nick. Thanks for the text.
Oh, my bad.
The fact of the matter is, just because we go somewhere rather quickly doesn't mean we stay on that path. And it works both ways. Think of any stock that has soared 20, 30, 40, 40 or 50% in a day. Carvana has done that. Right. Amazon has gone up, 13% in a day. Meta has gone up 11% in a day. So again, just because you have a thrust of price action doesn't mean it stays there. Okay, but Carlos, what about CrowdStrike? Whoa, yeah, that's pretty quick. You're telling me that you can lose nearly half of your market capitalization in 3 weeks? Seems a bit much. Use your common sense. CrowdStrike's not going to go bankrupt anytime soon. I don't think so. Do you think so, Nick?
No.
Right. Guys, this is a time during COVID when American Airlines was trading at $4, $3 a share. I mean, this is what happens. So try not to think of it as the world is over, because according to my count, in the past 10 years I've been doing this, we've probably had the world end about 65 times or so. And that's fine. Listen, doesn't mean that we can't take advantage. So the world's not ending. That's not a very sexy headline. That's not going to get a lot of clicks. You're going to be fine. Now let's take a look at the market. This is what volatility is, the cost of getting in the club of doing this. It's just the reality. Main thing here, when I'm looking here at the 20-day, the daily on the Nasdaq, you have the 200-day at 17,785. If you got there, just so you know, you're back to where you were in May. Let that sink in for a second. Since May, it's August, the beginning of August. It's only 3 months. We have done so much of this move. But the main point here on Nasdaq, in my opinion, is that we're back to the breakout level that we rejected in March and we broke out in May. A full retest. I think we've had that discussion a lot, and a lot of stocks that have broken out. Sometimes you get a retest, sometimes you get a breakdown. Does it determine a trend or not? Well, we have a lot of headlines coming in this week, Nick. I don't know if you've read regarding the Middle East and the West Bank, Iran and Israel,
We saw
and all that. It's nothing new, guys. We've seen this movie before. It's not to downplay what's happening in the Middle East, but in terms of the stock market, this is nothing new to price in. Unless we're talking about nuclear weapons, more times than not, things kind of just kind of move over and move on. I don't think people are going to sell Apple stock because there's a geopolitical issue in the Middle East. Now, if we're talking Taiwan, that's a whole different ballgame. We're talking about semiconductors and all that stuff. That's a whole different thing. But again, not counting World War III, so far we're doing is retesting the breakout. Now, we're below it, granted, but a couple of levels to look for, in my opinion. I think we get a relief bounce. I know what else is new. But guys, at the end of the day, you have to look at it really in the prism of it's the summer. Who's talking about stocks in the summer? Most people are taking vacation. Right. Not exactly, hey, Nick, it's August 2nd. We're on the beach hanging out. I don't think anyone's in their portfolio putting a stop loss in. This is just summer blues. This is what happens. Look how oversold we are, guys. We haven't been this oversold since April. And what happened in April? The same 3-week pullback, post-OPEX, and we soared. What has changed except the fact that we're going to have lower rates, which is not a bad thing, mind you. I know a lot of people may say, sell the rate cut, sell the rate cut. That's usually a bad sign. Well, did you sell the rate cut during COVID? Because that's what we got. We got a rate cut in COVID, if you guys remember. We got a rate cut in 2018, in 2019, after the Fed raised in 2018, and markets did fine. Granted, we had a recession in 2020, but again, that was COVID related. So I don't understand the premise of rate cuts. They may indicate something is softening, sure, but there's two different types of perspectives. When you're trying to undo extreme tightening or really tightening the market to kill inflation, this is kind of walking it back. This is not, to the point of 2008 meltdown. I just don't see that. Not when corporations are making money. Not when, there was a statistic, Nick. I think I read it to a member who wrote to me. It was 35% of outstanding homes in the United States don't even have a mortgage.
Yes, I remember that.
84%, guys, 84% of mortgage holders in the United States have a fixed rate of below 5%.
Wow.
So, I don't think you're going to have a real estate issue. What we have is a supply issue. We have a concentration issue. Everyone wants to live in the same 10 cities. What happens when we all want to go to the same place? It gets busy.
Right.
Traffic, things cost more because we got to feed more people. We got to have an infrastructure to handle the people. I promise you that your town is raising home prices not to upset you. It's just demand. And I think a lot of people who lived in these big cities are so used to being entitled to living there. Like, for example, no offense, Nick, you lived in New York. You live in New York.
Yep.
And you've lived there your whole life.
Yeah.
Right? You, in your mind, you feel like, hey, this is my community. I should be able to have, I should be able to live here without having 3 jobs. And I get it. But so does everyone else. Everyone wants to live in New York for some reason. Beautiful city, I guess.
To be honest.
But yeah.
I want to get out of here.
Oh, okay. Fair enough. And I think, and you know what? I love that you said that, because I read an interesting article this weekend, and it was from Barron's. And they were talking about that people, even with low interest rates on their homes, are willing to leave.
Yes.
Because they went a little too big in their homes. Like maybe they're empty nesters, grandparents that, their kids left the home already. Maybe they went to college or what have you. The point I'm trying to make is that the economic kind of stance where we are now is it's changing dependent on what the perspective is. If you're a homeowner, you're loving all-time highs on your home, right?
Yes.
Yes, I'm not going to leave anytime soon. But if you're someone that's house shopping, yeah, this is tough. But at least mortgage rates are coming down. We've talked about lower rates, lower inflation, check, and the lower dollar. We're at 103.22. Just a week ago or a week and a half ago, we were at 106.
Yes.
So the runway is happening for us to go higher in terms of asset prices. A lower dollar is inflationary. I know, I hate this game. Every time I want to kill inflation, it rears its head. How dare it? But that's how it goes, kids. Always. Technology is the major deflationary force that we have. When things are happening with innovation, when AI really takes off, things get cheaper because it's easier to make. You don't have to pay people $20 an hour to answer customer service. So prices come down, costs come down. Now, that may not be beneficial to a society, but we're greedy capitalists, Nick. We have to think about dollars and cents, buddy. This is how we roll. So back to Nasdaq. Who cares what I think about AI? Back to the weekly, and you could see 4 consecutive weekly candles. Now, I expect that we will have a green candle, weekly candle this week. Because if we have a red candle, weekly candle this week, that'll be 5. And we haven't had that in quite a while, since December. And then before that, we haven't had it since April 2022. Remember, everyone, April 2022 was, with the Russian invasion of Ukraine, we had the supply issues, inflation just went bananas, and we started raising rates. We're in a rate cutting cycle, and you're telling me that we should pull back to where? When money's about to get cheaper? Nah. You're getting ready to do some shopping now, team. We're not quite there yet. And the reason we're not quite there yet is there's one big elephant in the room that needs to report earnings. His name is NVIDIA. Yes. And they need to report some really great guidance. And I've noticed the last 3 or 4 earnings reports, they have all the pressure in the world and they knock it out of the park. Will this time be different? They don't report this week, but again, that is still hanging over us. What the Fed does in terms of a rate cut in September, that's ready to go. Now the question is 50 or 25. So with that being said, I know that was a lot we just spoke about, but the Nasdaq, in my opinion, is going to have a green week this week. Do not be surprised that we get a relief rally, guys. We are very, very oversold in the exact same oversold place that we were in April. If you guys want to watch the videos that we did back in April, it's the exact same thing we talked about, what we had in October. And again, guys, these things happen. So we're just looking for an opportunity here to play cheap calls, which we may not be there yet, or the point that we don't want to short in the hole. The last time I shorted, mind you, was 2 weeks ago. Do you know the stock name was? It was Apple. Do you know how hard it was to do that? 40% and getting out, it reversed on us immediately. I had AMD puts with Masterclass 2 weeks ago. That was minus 95% last Tuesday. I got lucky that it actually hit about 100%. I think it hit about 100% on those puts, or 200% last week as well. The week before, excuse me. So, playing puts at the end of the day in a bull market isn't easy, but they do pay out a lot. So the idea is, what are we trying to do? Are we trying to play reversals, which has higher upside, or continuation when there really isn't any, at least not during the cash session? Which is the camp that you want to do? That's kind of what you're looking for. Do I want high reward, same week, You know, hey, we're gonna stick with a reversal. I bet it falls from here, or I bet it soars from here, or you're looking for that, hey, whatever the wave takes us. And that's usually kind of how you and I do it, Nick, right? We just find the wave and we ride it because it's easier just to ride the market than predict the counter of it. Right. Let's be real, because markets can get rather wacky, right? So what do you see this week, Nick, personally?
Ideally, I'd love that bounce off of the previous all-time highs. I'd love to see it. But then
Yeah, I see it.
You know, what's kind of sitting in the back of my mind is the weakness, the seasonal weakness, where I've noticed gold. I talked about it last week. That was beautiful. Above 2450, would have went straight for 2488 to 2500. Hit my target of 25. Well, it didn't quite get there. It hit 2520. I was targeting 2525, but it's kind of making me question, you know, why also investors are looking for these safe havens, maybe like bonds, maybe like gold, and it might be because of a reaction here, just based off of reaction here, given how aggressively the VIX kind of reversed off of 30. We didn't even quite break above 30. That also is giving me kind of pointers where, because of
see the
that
break here.
complacency, you know, I want to say this is where you go long, this is where it goes higher, but I just can't be ignorant to where this weakness might do a little bit of chop into the week before it ends green. So I have to be very, very prudent and precise with what it is we decide to execute on. And given kind of the structures that I go for, what I look for, I use mostly the Dow theory for my analysis: higher highs, higher lows, lower highs, lower lows.
Sure.
And looking at NQ here, when I break it down below the daily on the 4 hour, you know, we're clearly making these lower lows and lower highs. So
what are you looking at now?
So in the face of death here, you know, there's a saying: when the time comes to buy, you won't want to.
You won't want to, right? Walter Deemer. Sure.
Shout out to Walter. And this would be the ideal area to do it. The issue is I can't excuse that if we cannot hold, you know, the lows of where we are right now. There is just a little bit of room. We can come down just a little bit.
239.
Yep.
239 on Nasdaq. That is the lows of May.
Right.
And that's where we bounced off rather quickly.
Right.
So I say this, and I'm kind of listening to what you're saying, and I'm leaning towards the camp that we get a reflex bounce for the simple fact that we've already had 4 consecutive weeks of red. I mean, again, we haven't had that since the end of 2023. That's the first time in 2024 that we've had it.
Right.
So what I want to do here is take a look at something with you. Let's take a look at the SMH. The SMH is semiconductors. We know what it is. Big time pullback. That's a big part of the Nasdaq now, thanks NVIDIA. We know the drill.
Right.
Take a look at the RSI. It's at 33. We haven't been this low since April. Same thing as the Nasdaq, right? Go to Qs. We've broken major moving averages, but again, are we to the point that is just too much too quickly? Right? The pace and the direction question.
Right.
Let's break it down like we would be in school. From left to right, what is the market telling you? Are we going higher or lower?
Bullish.
Just bullish, right? Now, if we go to the 4 hour, bullish, right? Still left to right, looking pretty good. If we go to the hourly, now it looks like my screen here behind me. Down. See? Right there, just coming down. Yeah. So obviously it's all about perspective. Now, a lot of questions I may get, I probably will get, is do I buy stocks here? And here's my question. What's more important, getting the best price or being in the market? Timing the market or being in the market? Because yes, this is a great a great opportunity to take a look at some names here, especially when there's everyone freaking out, apparently, to look at some names that you want to buy. Now, I have been saying NVIDIA here at 100. There's a gap to fill here. Right here at 96.50. I still have calls for this upcoming week. Terrible the next week. But we're bouncing off the 100. And it just got absolutely decimated. But it did bounce off the 20 weekly. Yet the Nasdaq hasn't, Nick. That's interesting.
Right. And ES
So
is above its 20 weekly, but
yeah,
NQ isn't. That's
my
interesting.
main thing here, looking at the market in general, is that Nvidia is so important that it's just moving along the Nasdaq. Yet there's one shining star that had their earnings, and yet no one's talking about them. It's Apple.
Yes.
How about that? They had sales growth. The only thing about Apple that I'm concerned with is this daily candle, inverse hammer, but possibility of a head and shoulders. So if Apple goes down, if Nvidia goes down, I mean, let's say it continues weakness, those are kind of the two barometers. Microsoft, yeah, it pulled back as well, but it seems like those two bellwethers, Apple and Nvidia, kind of leading the chase, leading the way down. And I always have Nvidia just staring at me throughout the day because you can almost count on those two working together in terms of the Nasdaq if you're trading futures, right?
Yep.
So if we take a look at Microsoft, I had this little bubble here when we were talking about this top end of this resistance. Now, the problem is at the time when it broke my alert, we had two factors. The first time we had the alert broken, and I wrote it on the blog, on the watches and charts, there was no volume. And that sucks. Again, the spreads were a little wide. I guess we were a little early of that. Second was earnings. I mean, I don't know what the earnings reaction would have been, but just based on technicals, yeah, Microsoft still goes down. So I'm going to kind of preface this. I think we get some early weakness in the week, but I think we get that kind of Thursday bounce that we had, or Wednesday snapback rally bounce that we had this last Wednesday. So I think we start off weak, kind of see how it works out. Sunday futures might be a little red, but I expect a little bit of a bounce into Monday as we go into earnings. And I think more than likely on Wednesday, we start some relief rally to piss everyone off, Nick. And I think we have a green candle for NASDAQ by the end of the week. I think it's just it kind of fits that script of kind of the choppiness of the summer. And guys, it's hard right now in the summer to just even have this conversation about stocks. Not many are talking about it. Yes, we just had a flush in the market, no doubt, but we're not at that point yet where there's a lot of demand. And it doesn't mean to sell at all because there's some that maybe do dollar cost averaging, portfolio rebalancing. You never know. But what we do know is that in the seasonal period, volatility goes up in August. That's fair. But the issue I have, the main one, is that we had everything happen so quickly that if we just look historically speaking, all it is getting back to where we were in April. We did the exact same things. We broke below major moving averages. Everyone thought the world would end. It was post OPEX. And guess what? It was post earnings. And what do we have now in difference of what we had in April? Well, let's take a look at April in terms of the dollar. We now have a lower dollar. That's good news. How about this? Yeah. Lower yields. Hello, this is not a bad thing for the market. Lower yields, lower borrowing costs. And then, of course, the last one being the VIX in April. We are slightly above where we had the bottom in terms of the April bottom, I guess we'll call it.
Yeah.
We were at a 21 VIX. We're at 23.39. Now, want to pivot to one more thing. Equal weight S&P. Stretch out the S&P 500 stocks, all equally weighted. This doesn't look very bearish to me, to be quite honest.
No, sir.
We're bouncing off the 20-week moving average, very similar to ES. If you look in the daily, you're above the 50-day. So equal weight S&P doing fine. IWM, I still say small cap summer, but obviously took a big hit. We're back above the 20-day moving average. We're still within this setup here. We do have a couple of gaps to fill below, down 3.5%. I mean, just it seems to me a little bit of unwinding risk more than the world is over. That's what it seems like to me. A lot of people were just taking their ball and going home for the summer. At least that's what I felt. A lot of the things are checked off. You know, gold was up, commodities were slightly up, but here's where it really gets interesting, Nick. You want to see something crazy?
Show me.
Take a look at high yield bonds.
Oh, yes.
This is high yield credit. Again, not the best credit scores, at the best FICO scores, whatever. This is small businesses that borrow or a little more on the riskier side. So when HYG is down, that's usually when things are a little messed up. You know, your local smaller companies, they're not going to be able to borrow. when their credit quality is weaker. So HYG being higher means that more liquidity, more of availability of credit is available, right? More availability of credit is available. Hello. With that being said, you could see the daily, just an upward swing above, right near the 20-day. This doesn't look pretty bearish at all, actually. And it's actually on the come up. You could see on the hourly chart, not as much that day. Well, actually pretty solid. So not a lot of panic on HYG in terms of these high yield bonds, but you would think IWM, HYG working together, right? Pretty similar structure. So HYG is not telling us there's a lot of stress in credit markets, but yet small caps were volatile. So to me, looking at it, all things being equal, it just seems that there was some profit taking for the summer, in my opinion. And we're not at extreme fear. Put call ratios would be a lot higher. So I would prepare for a little bit of weakness Sunday into Monday. Monday will bounce a little bit, get a little chopped around, probably get a little weaker. I think Wednesday, kind of like last Wednesday, that's pretty much what I'm going for, is where we start bouncing around and we'll end slightly green by the end of the week. And the only reason I say that, again, because of seasonality, Nick.
Yep.
That's pretty much it. Let's see. In terms of, let's look at some names together really quick. We talked about Microsoft. Let's see Netflix real quick. I mean, pretty much everything is down. Netflix is actually hitting some support, Nick. What do you think?
I love it.
Right at 600. And that was the number that we were talking about post earnings. Well, I guess we got it right, but a little early. But that's okay. Yeah, not an easy tape to trade unless you're doing short term. But I think we'll be okay moving forward. Let's take a look at AMD. AMD now trading at 132. Hey, we got a little bit of room down to 120, Nick.
Yeah.
Got a little bit there. Is there any stock that you'd be watching this week, Nick?
I was eyeing IWM. They got beat down. And
yep, and you're bouncing right off the 20.
Exactly.
I would target the 220 calls. See how the volume is this week.
That's funny you say that. I was eyeing the 215s into this week.
Nice.
Because I believe on the daily, we have a gap to fill. Yep, right above.
Yeah, you got one here at 203.60. Yep.
Oh, that too. To the downside. Yep. So it's either or.
Real quick, let's see. Change windows. We're gonna go to Discord, and we're gonna go to the earnings calendar. All right, here's what we got for the week.
Wow.
We have Palantir on Monday. Yay. Lucid. What else? Uber is on Tuesday. Supermicro Computer, Rivian, Airbnb, Win. Reddit, reporting too. Shopify, Disney, Robinhood reports Wednesday. And Canopy Growth on Friday. Trade Desk also on Thursday. Anything here that stands out, Nick?
Upstart Tuesday.
Upstart Tuesday, sorry. Do they?
Yes, sir.
Trying to see. Can't go based on the symbol. There it is. Upstart, yeah. I need my glasses. All right, so Upstart. We had options on that, and they expired negative. So let's change the view. I'm still working on this. How do I change my screen, Nick? My apologies.
Click on staff.
Let's see, share my screen. There we go. We got it. Thanks for being patient, man. Appreciate that. All right. Is my stream running?
Yeah, you're good.
We good? Okay, cool. Awesome. So we had Hood. They report. And look at that pullback. Oh, it's just killer. Everything just took a hit. Upstart. Yeah, it happens when you're long. But actually, I want to share something rather quickly, Nick, on Nasdaq. This is the last 5 days in terms of the Nasdaq. Okay? This is Monday. Monday was nothing.
Right.
And again, I really want to say this for the camera. It wasn't because we don't like shorting. I was short Apple before. I was short AMD before. We talked about Microsoft pulling back from the top end of that range. We talked about Netflix. Again, it's all about timing. Always. NVIDIA came back on Thursday. Was that Wednesday? Wednesday came back to 20% in the money. My NVIDIA calls. Doesn't matter. Monday, flat. When did we open? Monday. And then Tuesday, we got that drop. And then we bounced into after hours,
Yes.
into Wednesday.
Overnight.
And then we chopped around. And on Thursday morning is when we fell. And that's when it continued. If you look at Friday, really wasn't much. Thursday was the big one.
Yes.
Thursday was a big one. Why was that? Because it was post-Fed. Wednesday was the FOMC. And then we also had earnings on Thursday. I think it was Apple and Amazon, if memory serves me. But Friday, not much. So unless you are short, literally Thursday in the morning, because it'll happen really at 9 in the morning. You couldn't get it overnight.
Nope.
That's when we got the fall. And then during the cash session, really right after 1 o'clock, it just kind of stayed sideways. So the idea is if we can get some kind of consistency, right? Asking a lot from the market here, where we can ride this down. That's kind of where our bread and butter is. It's just at this point, you start breaking and breaking and breaking, and it just kind of stays there. And then you're trying to catch some points and also move stops accordingly. You have to have a lot of nerve and a lot of resolve. So again, lower those position sizes this go around, at least until the end of August, I would say, when we're kind of out of this summer stuff. If you're trading futures, trade one MES, if anything, or one MNQ. I think that's kind of what everyone's been doing, right, Nick?
No, I told them, because we're gonna be a little prudent, just you
Yeah.
can lower the position size. I'm
Yes.
telling them keep it the same because the goal remains. I mean, we
And
just
that's
change
fair.
up the
Okay, fair
strategy.
enough. And again, everyone's different. If you want to lower your position size, fair enough.
True.
The point I'm trying to make, give me a second. The point I'm trying to make here is that as things move, you could see just on this past week, all this volatility. Now, again, I personally believe volatility can continue, but volatility works both ways. Again, once you get oversold, you get a snapback rally higher. The one thing I do not want to do is to short at the bottom. That's the last thing we want. But again, a lot of this was really weird timing. You're talking about Thursday, first thing in the morning is when the big drop came. And yet we had a sore job on a Tuesday to Wednesday. And then Wednesday into Thursday was a complete chop, with Monday and Tuesday being sideways. Let's see if maybe this week, hopefully, we have some kind of clear direction. If we melt down, we're gonna take advantage.
Right.
But really what we're looking for is some kind of oversold bounce where we can ride the wave consistently. Because I think that's more of a powerful factor in terms of price action, is the reversal quickly, because all the people who are short are going to get out as quickly as possible as their stops hit and whatever. So we'll see if we get that extra week. See if we get a green candle. Oh my God, it was a lot of stuff we talked about, Nick. Is there anything I'm missing? My God, I may get in a tangent. My apologies.
Pretty solid stuff. I like what we went over. I like the stance and kind of the logic to it. There's like I
Sure.
like to say, there's always kind of reasoning to what something is unfolding to. If you don't have that reasoning, well, then you shouldn't really be doing anything. But we have
And
that
that's
down
fine.
packed. Right.
Right.
We have that down packed pretty well, and I like that. I definitely agree that, maybe Sunday, Monday, we see a little bit of that weakness. Maybe Monday, maybe we get a little bit of a prop up. But if we can go for a Wednesday where we secure at least 19,000, that's not too much to ask for from NQ. If we could at least secure 19K, yeah, it's over. This is going to be an oversold pop.
Yeah. Palantir reports Monday. I expect them to bounce above 2560. Fingers crossed. Let's see.
Love that name.
Yes, absolutely. Did pull back. I don't know if it's oversold or not, but it did pull back, even though it calls that hit. Palantir has been very good to us. Mara has been very good to us, but they hit us this week. It's been a tough one, guys. I'll be out this week, but Nick, you'll be handling the watches and charts, the chats, and we'll put a watch list up for the rest of the week.
Yes, sir.
Cool with you, Nick?
Absolutely.
So let's be patient with Nick. Of course, this is not his usual department. So again, any questions, he'll be the one to help you as well.
Nice.
So Nick, thank you so much for giving me at least some time to recover my eyes from the screen, because as you can see, I'm carrying baggage here, my friend.
Oh, of course. It's a perfect time too, where we're
rested eyes. I can't wait to come back. Yep.
It's perfect. Also, because into the end of this week, we'll pretty much have a general idea of, okay, what's happening next.
Sure.
Because after this week, I was looking at the Forex calendar. I think after
Mhm.
this week we have CPI coming up, and that's
Oh, that's
something I
always
wanted
fun.
to ask you. Um,
Yes.
More along the lines of it's a question where
Okay.
do you think that inflation data moving forward, based on all the macro events that kind of have been baked in already, is it
Mhm.
going to have as
No.
volatile of an effect? No.
No.
Okay.
That's over. Where we Powell, I think, in my opinion, has already confirmed that lower rates are already coming. We're already coming to a cutting environment. So the inflation argument, throw that out the window. That's 2022 talk. That's different. It's like talking about the metaverse now. You ain't talking about that. You're talking about AI. You
Gotcha.
know, that's it's
Gotcha.
just shifting. Listen, at the end of the day, guys, we're gonna spin the wheel of worry. There's always something to worry about. Remember that. Even when times are good, there's always something to worry about. To me, this is short-term volatility. And again, other than a world war, I think things will be fine. Again, we still haven't had that fifth week in a row really since I think it was 2022. Oh no, excuse me,
No,
it was
no.
December 2023.
Yes. Yes.
So again, we're still kind of in the April 19th post OPEX analog where we get that correction, minor correction, 5% correction on the S&P. We average about 2 a year. Nothing new. There's details on that on the blog, but other than that, it seems very garden variety when companies are actually beating EPS estimates and raising guidance with a couple of names that, that stand out. But at the end of the day, I think things are fine. And that's a good thing when borrowing costs can go
Yes.
lower at least.
Yes.
So we'll see. Yeah, I'm
Wonderful.
sure. I'm sure I'll take a peek here and there.
For
The
sure. For
markets. I'll
sure.
try my best. I'll try my best not to. But yes. All right, Nick. Thank you so much, man.
Thank you for having
Appreciate
me.
it. And to everybody here, again, me being out doesn't feel the best. I mean, I take this job very seriously. I really care about what we do. It's not easy, but I am just a human being too. I'm not a robot. The team here is busting their butt to make sure that we give you all the news and analysis you need. We tend to rotate time off, and this one time, I guess it landed on me. So it's good to have some rested eyes. And I know Nick will be taking a vacation soon. Me and him are gonna link up too, Nick. Yeah, you'll
Vacation?
be swing.
What's
Yeah,
that?
right. What is that? How dare I? How dare I? Yeah,
But for
that.
sure,
How dare I?
I'll be seeing
Hmm.
you soon for sure. For
Yes,
sure.
absolutely. Yeah,
We'll be
back to the
collabing
desk.
more.
So yeah, we'll get together, come out with some battle plans for this dip that we're about to buy. We'll see, right? We'll
Yeah.
see.
Yep.
We'll see.
One day at a
All right,
time.
guys. One day at a time. We'll see you guys, and I'll catch you guys on video next week since I'll be out this week. So no YouTube for me. Thank you guys again for your patience. I really appreciate you guys giving me a time off because Lord knows I need it. Have a good one, guys.
Cheers.